Okay, so in today's video, I'm going to be talking about historically the best months for you to buy into the stock market. And of course, we've all heard the saying, sell in May and go away. I'm going to tell you that's kind of a false statement, so let's get down and let's check this out. Okay, so today we're going to be looking at my computer, obviously, and the average monthly S&P stock market returns from the 1980s up until 2019 were as follows, or followed. We can see that January was, of course, a plus 0.8%. February it was a plus 0.29%. March was a massive 0.96% plus. April was absolutely fantastic at a 1.51%. May was ridiculously good at 0.97. June was kind of low. And July was a 0.79. August, look at that. Negative 0.15. September, negative 0.7. And then, of course, we start getting the pluses once again. The best months, of course, on the stock market end up to be, on average, April, November, and December. Now, you may be wondering, or at least may be saying, well, why does this matter? Well, for example, if we were to invest in something like SPY or VOO, we can really use this to our advantage. So, for example, we can buy once a year, and we can buy in August and September. Or, what we can do is to buy in August and September, and then buy less during those big plus months, and then wait for these negative months to roll over again and to start buying in. Now, of course, this isn't going to be really showing, of course, the individual sectors. So, for example, banks or tech. This isn't breaking that down. However, what we can see on this next chart is just how massive some of the months are versus some of the others. So, for example, what gets a lot of people in trouble is they will buy in April and say, wow, it's doing fantastic. May rolls around, that whole sell in May and go away idea. Well, guess what? Sell in May, sure, you can then buy back in June. Like, it's one of those things where I would personally, if you're looking to sell and buy into something else, that's totally okay. But don't just sell because May is rolling around. Because we can see that July is another big plus month. So what I'm saying is to use a chart like this to your advantage. February would be a fantastic month to buy in. June is a fantastic month to buy in. The best month of all is September. September is an absolutely ridiculous month to buy in. On average, down 0.75%. That is huge. So why does the charts look like this? Well, historically, June, July, and August is usually the dead times of the year when it comes to the stock market, and we're kind of seeing this for any financial YouTuber. We're kind of seeing this right now on YouTube because there's less people looking to invest. They're on vacation, they're spending time with their family, they're working, whatever it may be. And then, of course, when September rolls around, because the stocks underperformed most likely what they were performing like before, people sell in September because they're worried because the stocks over the summer were not performing the way they wanted them to. And that's probably why September is always such a down month. It's usually when people are coming back from vacation, coming back from summer, seeing their underperforming stocks. Sometimes there's, of course, news that happens. For example, this year, there may be a taper tantrum in September, and that might just plummet the market 5 to 10%. Who knows? But remember what Warren Buffett always said. Be greedy when others are fearful. Buy when the stock market goes down. Sell when the stock market goes up. You never want to buy on an up day because guess what? We will only have maybe 2 or 3 or 4 up days at max in a row. Guess what? On that 3rd, 4th, 5th, or 6th day, it's going to come down. The stock market doesn't just go into the moon forever. It has pullbacks. So I know there's a lot of people who are online who say, buy stocks. Whenever you have the money, buy it, buy it, buy it. Well, guess what? That's not always the best case. Sure, if you're looking to get in today because of the next dividend date that's happening tomorrow, that makes sense. You're going to make some money on the dividend. If the stock goes down a couple of pennies, it's not going to matter because you're still going to be making that dividend. But if that ex-dividend date's not going to happen for another 2 months, you might as well wait for a pullback so you can make an extra $5 or $10 on the rebound. That's the type of investing I personally do. And how I like to run it is I will keep my money in something like a ZSP or into an XIC or something where it's like an index fund. And then, of course, when it's time to buy a stock, what I do is I will then sell that index fund and use that money to buy that stock. That's how I personally do it. And I also do keep cash on the side too in case, of course, we have just a broad market downturn. For example, what we've seen about a year or so ago when the stock market was crashing because the virus was becoming mainstream news. So always keep cash, always, because you never know when you want to buy something. I'm talking about stocks, not just garbage. But that's how I personally look at it. This is a great chart to go by because then you can have it marked off in your calendar when the best months are to buy. And essentially, in theory, of course, the stock market can go down at any point in time, but the best times to sell would be, of course, when we go back down to this chart, we can see the best times to really sell would be April, and then, of course, November, December, May, March. Those are good times to sell because the market's up. But if you're selling in March for no reason, other than maybe to get out of the stock market because your stock's doubled or something, then of course look at something else to invest in because that's going to have another month of potential increases. And if you're selling in April because, let's say, your stock's tripled, then of course buy back into something else because now, guess what? There's going to be still another plus month. However, if you're selling in May, maybe not go back in until potentially June or August, depending on what's going on. Anyways, that's just a small little strategy. You don't have to run with it. It's something that I've looked at a few times. I've had times where I've kept cash for about 2 or 3 months before I found something that I thought was a good deal because I knew, hey, there's September coming by, there's going to be a pullback. I'm going to just wait a bit, and I think it was TD stock at the time that I bought into in September of a couple of years ago, and September I think it was September or August or September that it crashed down like $10, and I basically bought in about $1 something above the lowest point, and because I thought, well, if it's already starting to come down just a bit, in theory, August, September are usually the worst months for the stock market. It's going to continue. If it doesn't, it doesn't. I'll buy in later anyways. But have patience and wait. And then I was able to get 100 shares of TD at a $10 discount, where a month and a half later, it rebounded back to where it was before, up $10, which then ultimately made me about $1,000 because I waited. I didn't just go in to get into it because it pays a dividend. I waited about a month and a half. And I wasn't going to get a dividend anyways. There was no ex-dividend dates during that time. And I just missed one at that point in time. And I was just like, well, if there's no ex-dividend date, I might as well just wait. I might as well just wait and see what happens. And then it went down. And then I made my $1,000 plus I got a dividend at the end of the day because I still waited and it didn't matter because then the dividend date was later anyways. So there's some ideas for you. I hope that this has kind of helped you out. If it has, hit that like button, subscribe. I'll see you guys again next time.